late today. Why? Why are we running late? There's no reason. There is no reason. But good morning, everybody. Welcome to the morning show. It's the best morning show in finance. Did you know that? Spencer Israel here with JC Parets and Steve Strazza. What's up, chat? What's up, Ken? What's up, Curtis? What's up, T-Core? What are we talking about today? Let's see. We're talking about, I'm thinking about bond yields. Highest level, what was it, for the 10-year since, 2008? So that's on my mind. We got some earnings. Walmart on my mind. Cisco on my mind. JC has charts on his mind. Strazza has charts on his mind. Today's featured guest, Shane Murphy. If you follow Murphy's charts on Twitter, you know Shane Murphy. He posts some great stuff. We have a few of his charts actually ready to discuss. That'll be at 8:50. Very excited for that. We'll have Kimmy Sokoloff at 9:15. What's today? Today's Thursday. So Sean McLaughlin on the show at 9. Call it 9:30. I don't know. We'll figure it out. All right. You know what to do? Smash the like. Let's roll.
All right. Good morning, Mr. Strazza, Mr. Spencer. How's everybody doing in this lovely Thursday?
Doing good. How are you?
I couldn't be better. I'm leaving to Boston for the weekend. Very exciting. Very exciting. I like Boston a lot. Big fan. What about yourself? Do you make it that far east?
Yeah, I used to go to Boston a lot. I like Boston more than Manhattan.
Shut up.
Yeah.
All right. You're done. State of the market. I can't have this conversation. What do you like about Boston that's better than Manhattan?
It's cleaner. It's quieter. It's too much. Manhattan's too much for me. Boston's a little more spread out. Yeah.
You're so full of shit. Are you listening to this guy right now?
It's more relaxed. A lot of people would agree.
Get out of here.
And it's a lot cleaner.
I disagree. I will say Boston has infinitely better clam chowder, and that's all they've got. Is better clam chowder.
Go to Legal Seafood, JC. Legal Seafood is the move.
Listen, I'm all about seafood. I don't know if you heard, but New York has seafood too. It's like a thing, right?
Go to Legal Seafood. You'll like it.
Legal Seafood's a chain, man.
Nice. It's nice there.
Yeah, all right, it is good. Okay, state of the market.
Let's go.
Capitol Grill's a chain too.
Anyway, so's Morton's, and they're not terrible. All right, so here's what I'm thinking. So nobody wanted to buy stocks last year. We did. That worked out pretty well. It's nice being lonely. It's when everybody agrees with you that I don't feel so good, and I'm a big fan of sleeping at night. And when everybody agrees with me, I don't sleep as well. Now here we are, and everybody, even the perma bears are like, maybe things aren't so bad after all. Maybe this is a bull market, right? The magazine covers, the hedge funds covering their shorts. Things were getting a little frothy, and then price confirmed, right? So just because things were frothy doesn't mean that the market cares, right? Because consensus could be right for a while, right? You need bulls that are buying stocks to have a bull market. So that there's a certain element of that. And then if you want to throw up slide one, then we got the failed breakout in the largest component of the S&P 500, representing 20% of the S&P and half the NASDAQ, right? Technology. Failing, right? Can you take out that state of the markets banner there? Okay, that's good enough. That's good. So you can see that failed breakout. So the bottom line is this. The S&P 500 and the NASDAQ, you could probably throw in the Dow there too, less so, but you could probably include that, are going to have a hard time advancing with technology stuck below that overhead supply from the prior cycle's highs. I don't know how long it's going to take for demand to absorb that overhead supply. Last time technology was here, technology fell what, Strazza? Like 40%, something like that?
How much did it rally?
No. How much did it sell off?
Just over the past month?
No, man. Off the highs at the end of 21. What are we looking at? 175 to 115, 60 points, 30 something, 40% or so. Big decline. Nevertheless, the point is, it's not about the size of the decline. It was a massive decline. And that decline started from the exact same levels that we are now, right? So I'm not necessarily saying that we're going to have the same decline or a worse decline. In fact, I don't think we have a decline anywhere near the magnitude of the last one. But I do think the market is going to continue to struggle while it's below this overhead supply. And my suspicion is it's going to take longer than most people want for that digestion to take place. I could be wrong. I've been wrong before. I'm happy to be wrong in this case for that matter. I'm happy to buy tech stocks. But in the meantime, we have to just be aware that we're below overhead supply. And in these situations, Strazza, one of the things that I love to do, and I know you do too, is start making that watch list, right? Start making that watch list. And before we get into the watch list, why don't you show the next chart showing the semiconductors, basically telling you the same thing, right? We got back to those former highs, failed miserably, and like the rest of technology, semiconductors are struggling, right? How long will it take semis to ultimately break out above those prior cycles highs? I don't know, right? This is the best news for semiconductors that I may have ever heard ever in history, right? AI is going to change the world and blah, 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 and this and the other thing. Meanwhile, semiconductors are struggling to break out above those prior highs. Skip down to the 2 to 100 club because I think this is really relevant here. And, I feel like Strazza, I think you and I do a poor job. I think we do a good job of a lot of things, but this is one thing we do a poor job of is really walking through some of these bottoms up scans and really sharing with the audience why it is that we find so much value in it, right? Right. And we don't do as good of a job. So let's try to do a better job of that. The 2 to 100 club, this inspired by our friend Howard Lindzen. I'm on the phone with Lindzen. This is years ago. And he's like, JC, you know what we need to do? I'm like, what do we got to do, Howard? He's like, JC, we got to find the next $100 billion stocks. I'm like, that sounds great. Yeah, let's do that. Right. Let's do that. And then I'm like, okay, but how do we do that? He's like, I don't know, JC. Get with your crew and you guys figure it out. I'm like, okay. So I call Strazza. I'm like, all right, Strazza. Me and Lindzen agree that we got to find the next $100 billion stock. So how do we do that? Right. And I'm pretty sure it was you who came up with the good idea of let's eliminate the types of stocks that are just not going to do that are not going to scale from 2 to 10 billion up to 100 billion. Things like utilities, things like consumer staples, right? There are certain stocks that's just not how they're built, right?
We removed a lot of the cyclical businesses, right? Like a gold miner or a copper miner could go 10x sales during a business cycle, but they're never going to go from 2 to 100 billion. So this is mostly tech, mostly growth. We did cherry pick certain growthy industries from a variety of subsectors,
like medical devices, for example.
Yeah, there's fintechs in here, right? So there are financials. It's not like sector agnostic. So
there's some aerospace and defense as well, right? Some media. I mean, there's definitely I don't want to say cherry pick because cherry pick has kind of a negative connotation, but hand selected, I would say. Hand selected industry groups that are more growthy within a traditionally non-growthy sector. I think medical devices is a great example of that, right? It's healthcare, but is it healthcare?
There aren't explorers and producers. There's not exposure to, like, say, energy stocks, but there is a stock or two that makes underwater robots for drilling, right? And have exposure to energy that way. So it's all techie stuff and growth stuff. And it turns out to be a really big list because there are so many of these stocks, in different sectors. Then what we do is we limit the market cap. We look basically between 2 and 30 because that to us is kind of a mid cap, right? We expanded the upper bounds on or the ceiling on what a mid cap can be. And then we're looking for, multiple baggers over longer time frames as these stocks grow into large caps.
And I like the $2 to $30 billion sort of situation there because that means that even at 30 billion, the stock can still triple before getting to 100 billion, right?
Yeah, right. That's the idea. And then if you get one that's, a $2 billion name, God forbid, you can get 5x just before it gets out of, traditional mid cap land.
And then so in this environment where the growth stocks are having a hard time, right? You got technology and you got semiconductors stuck below overhead supply, failing at the prior cycle's highs.
Yeah.
This is a good list to be like, some of these are actually holding up pretty well in this environment where technology's down 7%, 7.5%, whatever it is off the highs.
Mhm.
NASDAQ's down quite a bit. Also, we're in the midst of a correction. A 10% decline off the highs doesn't mean if it's a correction. If you think that a 10% decline off the highs is a correction and a 20% decline off the highs is a bear market, you should check yourself into a mental institution,
You don't like
because
that?
those numbers don't mean anything.
Really?
Do they mean something to you? Is there a magical number of 10 that means anything other than the oversimplistic mentality of the human mind?
Again, not going to get into it here, but it's just something that's used by the media because they have to draw a line somewhere. They have to have some sort of a simple way to
Okay,
define.
but are you in the business of writing gossip columns
No, we don't
and
have.
getting your audience to consume your content
I'm
at
just trying to.
in a malicious manner that you're going to make up the value of a number 10?
I don't know how malicious it is, but yeah, I hear you.
This is the dumbest thing I've ever heard. Strazza with the shirt, getting compliments, right?
Every day, Strazza gets a compliment on
Is
his
that
shirt.
one of your Thailand shirts?
Yeah, of course,
Okay, now you're just showing off now.
guys. I'm used to it. All right.
So anyway, my point is, if anybody tells you that a 10% correction off the highs means it's a correction and a 9% isn't, you're an idiot, right? Like, that person might be dumb, but person might have ulterior motives to convince you that that is the case. So maybe they're not idiots, but you are, right? So a 19.5% decline is not a bear market, but a 20.1% decline is a bear market. Like, what kind of serial killer thinks like that? So that's silly. And if you believe that that's true, you're an idiot, right? I'm happy to say that. Like, I try to be nice to people, but like, that's just dumb, right? Okay, so let's talk about the 2 to 100 club. These are growth stocks in an environment where growth stocks are struggling because they're stuck below overhead supply. And by the way, interest rates are absolutely ripping, right? Which is putting that downside pressure on those growth stocks. Let's take a look at a couple of names. Look at Fortive. Am I saying that right? Fortive?
I
Fortive?
think so. Fortive.
Fortive? Then how come it ends in E? It seems like more like a Fortive.
I
No?
don't think so.
Shows you how familiar I am with this company. $27 billion scientific and technical instrument stock. That means nothing to me at all. What does that even mean?
They do support and services around the companies that are developing like clinical research based drugs and medical devices.
I always interpreted it to mean like beakers and things like that. Like,
yeah, that's what I would think too. I don't know.
Yeah, but they're in the technology sector, so my suspicion is it's more than a freaking beaker.
It's probably software and related.
Oh yeah, it's probably software.
Engineering
That's a good call.
products.
Dude, now that I'm an adult and I'm watching the Muppet Babies again, the fact that there is a Bunsen and a beaker, and those are the characters, and it took me 40 years to figure out why they were named that, like, just throwing that
Bunsen
out there.
burners.
Bunsen burners. I know. I didn't know that when I was 6, right?
Wow. All right.
Yeah. You start catching on to some of these things when you go back and watch the Muppet Babies, which I find myself doing quite often these days, watching the old Muppet Babies. They got new characters. They got this little bird named Summer. Summer wasn't around when they're just changing things up on us. But look at this base, Strazza. And maybe because of the healthcare element to this, maybe there's a little bit more relative strength compared to something like mid-cap semi, right? Is there something there, you think? Like maybe some additional sympathy bidding?
I don't know, but the relative strength line really stands out here, right? This one, all-time highs, both absolute and relative terms. Names like this, we just look for ways to enter them. This one, we actually have a really clean level to enter on too, but if this one had already broken out of its base, we'd be looking for a way to get in.
And now think about this. This might take time. My suspicion is it probably will take time. Yeah. But the relative strength is there. So this is one of those, set your alerts, right? Yep. Set your alerts at 80 and a nickel, 80 and a dime, something like that. A little bit above 80. And when that alert goes off, there's your trade, right? And maybe the alert goes off this week. I doubt it. Maybe this month. I doubt it. Maybe not even this year. It might even be at the beginning of next year. But set the alert, right? And keep the alert on a good till canceled, right?
You know, the reason why the relative trend looks the way it does over the short term too is just look at the absolute trend here and the way that this thing is consolidating at resistance, right? And then look at a chart like Apple and the way that it consolidated off of resistance. It really got
Great point. Can you throw that up there, Fonz? Throw that up there, Fonz and Spencer, while I answer this question. Jerry Carey wants to know, what is the difference between this base and the overhead supply argument for the index? First of all, there is no difference, right?
No.
It's the same thing. The only difference, I would say, is that this one is showing more relative strength than the index,
That's right.
So that's sort of, if there's any difference, it's less of a difference and more of a comparison, right? What is the index doing, and then what is this stock doing? And it's showing relative strength, right? That's why I brought it up. The other one is MedPace Holdings, MEDP. Do you know this one?
Yeah, and hold on, just to that point, right? Like when you look at something like XLK, while it is a failed breakout, I don't look at a chart like that in the strongest group in the market and say, oh, we're going to get some fast move lower, down to the lower bounds of this range. No, I think of that more as it's probably a false start. This probably takes time. We have to digest, more of these gains, chop beneath this overhead supply level, but eventually we reclaim it and go. And a stock like Fortive that is almost, barely paying attention to this overhead supply, at least, relative to something like XLK or Apple or some of these other examples, that's a stock that we want to be in an environment where XLK finally does go.
Spencer, can you throw up a chart so that we can see it, so it doesn't look like I'm drunk when I'm looking at the chart? Come on, Spencer. What is that?
MedPace is an interesting one too.
Seriously, what was that?
Got to be honest, don't love the way this one trades as much.
I got it.
MedPace?
We threw it in there. Yeah, it's a little bit. It's not the most liquid. It meets our average dollar volume threshold, but
it trades 350,000 shares, and it's a $250 stock. I mean, that's a lot of that's enough, dude. What do you want? What more do you want?
350,000. It's gappy. I don't know.
Yeah, but it's 350,000 shares, but it's a $250 stock. That's a lot of market cap. That gets the point is.
I'm saying
Strazza, you're not big enough where this is too little.
I don't love the way it trades, is all I'm saying.
But nevertheless, to Jerry Carey's point before, what's the difference between that other one and the index? Look at this one now. This one's already above those index highs. You feel me? You see what I'm saying? So, like, you want to talk about how the other one was showing relative strength. This one's showing even more relative strength. Now, to be fair, it's not in the tech sector. This one's officially healthcare. Even though that other one had a healthcare twist, it's labeled as technology. This one's definitely labeled as healthcare. This is in the research and diagnostic space, which those research and diagnostic stocks are regularly coming up on our scans, man. What are they diagnosing and researching these stocks? I guess all kinds of stuff, obviously, right?
Mm-hmm.
Seems to be good business. Dude, those things are coming up on our scans all the time. Okay, so I would keep a close eye on the 2 to 100 club. If you are interested in getting the latest 2 to 100 club, just dropped this week, email Spencer. Spencer, where can the folks reach you to get a copy of this month's 2 to 100 club?
You can always email us. Us is the key word there, although I'm the only person among us that actually checks that email. But
what about Peter? Peter checks it, no?
I meant amongst us.
The three of us
here.
Fair.
Questions at stockmarketmedia.com. Email us and we'll get over that report. Get that report over to you.
And then I had one more thing I wanted to mention before we bring Shane on, and just kind of talk about Bitcoin pushing down against new 2-month lows. Yeah. Why don't you show the short-term chart first, and then we'll zoom out, and then we'll get over to Shane. Looking forward to talking to Shane. So here's the close to 2-month lows now for Bitcoin. Really talk about stuck below overhead supply. Interest rates going higher is not helping. Technology and NASDAQ stocks not going up is not helping, right? So these things need a swift recovery quickly. Because zoom out, these are the implications that we're talking about here in the old Bitcoin. The old Bitcoin, that former support turning into resistance, just like they teach you in technical analysis kindergarten. The first day of TA kindergarten, you talk about former support turning into resistance. Ladies and gentlemen, this is that, right? So I don't know how long that former support is going to be resistance. Maybe it breaks up. I doubt it. Could break out next week. I doubt it. Maybe not even this year. Could be. I guess we'll see. But man, when that thing goes out above 31,000, mortgage the house, flip the book. Let's go. And in the meantime, you know, it's a mess. You have the lowest volatility like ever. You know, the volume is like non-existent. There's a big move coming. There is a
close
big
above
move.
31 on a weekly, because that's what this is.
Not necessarily. No,
Well,
not
you said
necessarily.
that. You said that last time. It definitely closed above 31 for a day or two.
Yeah, fine. Yeah, but it depends on your time horizon. Not everyone's going to wait a week until you see that close, right? Somebody might not even wait a day, right? There's no right or wrong way to do it. The most conservative way to do it, yeah, wait for a weekly close. When's the close? Is it Friday? Is it Sunday? Is it 8 p.m.? Is it midnight?
That's true.
Like, so now you got another decision to make. So it's more, I wish it was so simple, but that's not exactly the case. So I would keep a very close eye on this, guys. I think a big move is to put it in Steve Strazza parlance, a resident of South Florida. This is like a hurricane moving west from Africa, and you could see it out in the Pacific, and it's on its way. It's on its way, and that's what that volatility. And by the way, volatility is price agnostic, so volatility can drive prices both higher or lower. So just keep that in mind.
Do you mean the Atlantic?
What did I say?
You said the Pacific.
My bad. Those are typhoons, right? Typhoons. Sorry.
Two quick.
I haven't lived in Florida in a long time. I can,
We got Shane. Let's go.
Two quick programming notes. All right, before Shane, we talked about Hawaiian Electric the other day, and I said,
not on the show. We didn't, but before the show we did. No, we never did. We never did.
So you and I were talking. I said it's selling off as if they're going to get blamed for something, or they did something wrong. And as it turns out, this is a very similar situation, it seems, to the PCG thing, where they are getting blamed for everything at this point. They're in restructuring talks already. So that's a disaster. Also, I just thought this was funny. I get a bunch of like analyst note excerpts kind of sent to me every morning. Check out this one. Match analyst. Tinder channel checks positive. Our 3P Tinder checks were encouraging as July U.S. What do you think a sell-side analyst is doing when he's tasked with channel checking Match.com's business, and he's channel checking Tinder?
What a life!
I mean, that's
listen, Jeff Mackey. We need to have Jeff Mackey on the show, especially around retail earnings. Jeff Mackey pays young women to go shopping at like women's stores. Like,
just gonna say, that's one thing. It's one thing to go count cars in the parking lot. It's another thing to download Tinder and start swiping for a channel check. I mean, that's some job.
What about Rick's Cabaret, publicly traded stock, RICK? Someone's got to do some channel checking.
Okay. Yeah. All right. Let's get Shane Murphy on the show. He's been waiting patiently.
Bring him on.
All right.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Murphy.
JC, Steve, what's going on, guys?
What's up? All the way from upstate New York. Where in upstate New York are you?
So we are smack dab in the middle of the state, right in Syracuse, New York.
Got it. So that's real upstate New York, not like Westchester or like Yonkers.
Right. We're real upstate New York.
Even though you guys up there call it mid-state, don't you?
We call it central New York. That's what a lot of people throw out. But
there you go.
We're the real deal up here. That's for sure.
Yeah.
So you and Patrick literally grew up in the same town.
We did.
Correct?
We did.
Okay. Did you know each other or no?
We did. We crossed paths in high school. Believe it or not, we dated a few of the same girls. So our history is deep. It's rich. I've known him a very long time. Pat is he's a great guy. He's actually the individual who pointed me toward the CMT Association.
There you go. There you go. Quite the ambassador, Patrick.
He is.
Oh man.
Yeah, he really has.
He's done a lot, and he's always open to share his knowledge as well. He's around so many smart individuals day in and day out. He has an opportunity to absorb that like a sponge, and he answers my calls still. So I'm going to keep calling him for as long as he'll pick up. So
he's not too big time now.
Not too big time. Not yet. Not yet.
Don't forget the little people, Patrick, on the way up. I got to head up by you. I want to go to a Canes Cuse hoops game. Just
That would be a
do
good
that.
time.
You're not that far. You're like 3 hours from me or something like that.
Yeah, just under 3. Q's Hoops, it's the real deal. They put
And
on
then
a
is there
great show.
is there a better joint to eat than Dinosaur, or is that the move?
Dinosaur's good. Dinosaur's good. I actually live, JC, about a 2-minute walk from Dinosaur. So it's a little too close. We find ourselves there a little too often.
All right.
But it is, Dinosaur's a good spot. There's a few places I know you'll
I
enjoy.
know. See, I know. I'm not a rookie.
He knows one restaurant in Buffalo, Shane.
Which one?
Dinosaur.
Oh, yeah.
Dinosaur. First of all, Dinosaur's in Syracuse. It's not in Buffalo.
Oh, okay. Same thing.
No, see, now he's being one of these like city folk supremacists over here, where like everything is Buffalo, Syracuse. What's the difference?
You guys are talking about Syracuse. I heard Buffalo.
It's Syracuse. We're on the up and coming. We have a Micron factory coming in over in It's a lot of good stuff happening here in Syracuse.
All right, so Shane is showing his hometown bias here. Unable to overcome his hometown bias.
Shane, are you a big Orange man? Like, are you a big Cuse basketball fan? No.
Believe it or not, my father went to Syracuse University, and I grew up here. I'm born and raised in Syracuse, New York, and I'm a big Notre Dame fan.
Wow.
I'm one of those stereotypical, Notre Dame fans. Didn't graduate. Wasn't born, in South Bend or raised in South Bend.
Yeah, well, your last name's Murphy, so you got that going for you.
Exactly.
All right. Listen, enough chit chat. Talk to me about the market here. I'm being told that this is 1987 all over again. The market's going to crash. Is that what's happening?
I look at it, JC. As long as the S&P remains above, call it 4,300, it's a pretty normal price move, right? We came a really far way in a very short period of time. And I think, allowing things to digest and allowing, analysts to revise earnings and for the market to sort of price itself accordingly, I think that's what we're seeing, and it makes a lot of sense.
And why 4,300? What's so magical about that? The August highs last year?
Yeah, we see it act as a significant, price zone over the last, call it 18 months. If we were to see a move, down to that level, that would be another 2.5% lower. I would view that as perfectly healthy and normal. No need to second guess the bull market that we find ourselves in.
Yeah, I was told that was just a bear market rally that we had.
Yeah, it's tough to look at it that way from my perspective, whether it's from the breadth angle, whether it's from, and when I say breadth, I don't just mean moving average breadth. We're seeing a lot more participation, among the, I guess the smaller U.S. stocks. But hey, we'll have to see how it resolves. Right now, where we are, I would view it as a healthy pullback.
And you bring a chart here that's near and dear to my heart. So clearly, your audience. We've been pounding the table about the negative correlation between the dollar and equities for quite some time now. And I truly appreciate that that's where you're starting. Listen, I'm no genius or nothing like that, but these two lines look the same.
They do. What's interesting with the dollar, JC, is that when it made that false breakdown, we saw a lot of headlines surrounding weakness in the dollar and what's the next 12 months going to bring for the dollar. But when you zoom out and you take a look at a weekly or a monthly chart, we're sitting right atop of some pretty important price zones, some pretty important price memory. So in looking at that, I still think the weight of the evidence is in favor of the bulls when it comes to the dollar index. And a strong dollar.
The weight of the evidence is in favor of the dollar bulls.
That's right. And a strong dollar that's going to be viewed as a headwind for stocks. So didn't want to get too bearish on it during that breakdown. But now it looks like we're seeing a classic false breakdown from the dollar.
What's your level for Dixie?
Level for Dixie. So if we look here, 102, 103, really between 100 guys and 103, I believe that's the long-term support going back a few years. Anything north of that, I would stay, strong on the dollar. Anything south of that, I think it makes sense for, to have a bearish view on it.
So if we roll back over here, say take out those pivot lows around 101, then you would shift and say the weight of the evidence is bearish. or
I
US?
would.
Okay.
I would. I think keeping it simple when it comes to something as complex as the dollar index, it's the best way to go.
Yeah, totally. How about rates? Where's your head at with this bond market stuff?
Rates are tough, man. They're sending mixed signals. Obviously,
That's
the
what I said.
10-year.
I said we're getting mixed signals, and I got yelled at in our office meeting.
With this bond market.
It's tough. It's tough. The 10-year, obviously, that's going to be a psychological. I mean, for it to have new closing highs when the 5-year and the 2-year, I don't believe they're above, they're trailing 12-month high. But the 10-year, I mean, it's tough. If we go back to the start of the year, I think it made sense to start having the conversation, especially within our own client portfolios, that maybe market neutral bond alternative type investments no longer make sense given what we've seen from interest rates.
Yep.
And I still think if you made the decision going back to the start of the year to gradually shift into duration, even with how things have played out in rates, I don't view that as a bad decision. I think that's the prudent choice here. You can earn close to 4% just on your bonds, on the ag alone. So I think it makes sense to continue to shift toward fixed income assets and away from some of these alternatives. As far as the forecast on where rates are going, I mean, I don't know. It's tough. I like to provide ranges, and when those levels are breached, to just reevaluate and try to develop a new range. But right now, it's been tough on bond bulls, that's for sure.
So what's the bullish thesis for buying fixed income here, and what kind of fixed income?
I would look at it. I still think the sweet spot on the curve obviously is going to be on the shorter end, right? We're looking at 0 to 2 years pretty much is where you can really get the most for your buck. But as far as I guess on the longer term portfolio, it is important to have duration in there, right? These long-term treasuries, they do act as a hedge against any type of real shock to the system. I know the U.S. just had received a downgrade. But it doesn't mean that these assets are going to behave any differently in a giant risk-off event. So I still think it's important to incorporate duration, but I still, as far as average duration across the portfolio, staying on the short side still, makes a lot of sense.
Can you tell me what you're doing in the equities market? Right? First of all, why don't you tell the audience a little bit about what it is that you're doing for a living during the day? Right? You're not just YOLOing Tesla calls, right? There's some thought process in what you're doing. So who are you serving, and what are you doing in the equities market for them?
Right. So we serve. We are an independent wealth management firm. We clear through Commonwealth Financial. They are a broker dealer, and they act as our RIA. But we serve families across the U.S. With their retirement portfolios, as well as I guess family wealth that has been, passed down generation to generation. And what we really try to achieve is just provide sound advice to these families as far as their portfolio construction, help them understand the amount of risk they're taking, help them understand what they should expect in terms of a long-term return from their portfolio. And we do manage a suite of model portfolios. They are more of an all-weather type portfolio that does carry a more tactical component. We like to view any type of active decision making with a lot of humility. So we may, tilt on the sector level or the industry level if we're, feeling a certain way about a specific industry group. But it is viewed as an all-weather portfolio, right? For instance, right now we have a tech overweight, and believe it or not, a healthcare overweight as well. We think it complements the overall portfolio very well.
Those are the two largest sectors in the indexes.
Yeah, and you got more of a defensive side in the healthcare sector, and on the tech side, it is more of the way we're expressing that position is by sort of shifting away from some of the mega cap tech names and focusing on a smaller average market cap held within.
And what about the international exposure?
Yeah, it's important. We're not. If we view global equity market cap, right, like the guys at Vanguard, they just throw 40% non-US into their portfolio and call it a day. Our view is that is a bit too much for the portfolio in terms of how it really bends its risk metrics and how it a little bit too large a position that we're comfortable with. So We do believe it's important, right? We view the US and the UK as the anomaly, right? There really has been no longstanding market through history that hasn't gone to zero or been just completely erased from the face of the earth, other than the US and the UK. So it'd be naive of us to not include non-US stocks. Ex post, when we look in the rearview mirror, there's been more volatility, less return, and it turns a lot of investors off. But we always try to keep, focus on where the puck is going, and staying true to just the way we view the market. We do view that as a prudent decision to include those types of stocks.
Are you leaning developed or emerging?
Right now, developed. You're looking at Eurozone, areas in Japan. Japan's been red hot. Not the most crowded trade yet, but I feel like it's getting there. We're going to take on an index level position. So you're going to get a lot of Japan, a lot of Germany, a lot of UK. On the emerging market side, still to be determined. I mean, there's a presence in the portfolio, but it's very small. I think that, as time plays out and these markets tend to grow into themselves, they'll become, I guess, more attractive from our view.
China, yes or no?
Steve, I had a view on China going back about 18 months that I was just dead wrong on. And
What was it?
I was bullish on China. I thought they were at a different point in their business cycle, right? Different point in just what we were seeing in the US.
Yep.
And I thought a lot of the, I guess, regulatory, geopolitical risk was overblown, and it didn't materialize. So,
and they were early. They were early to bottom last year, Shane. Right? So your head was in the right space. There was just no follow through ever.
They were showing evidence of bottoming long before anything else. So they kind of head faked us all. And the geopolitical stuff there. I mean, Shane, I feel like investors just learn this over time, and I'm slowly getting there too. Like, whenever you think the geopolitical concerns or risks are, kind of being overstated, they're not. We find out they're absolutely not. And in fact, they were, a lot more grave and worse than we thought.
Right.
Shane, what do you like? What's got your attention that no one's talking about right now?
What no one's talking about right now, what sort of, I wouldn't say no one's talking about it, because it has been a pretty strong headline. But I sent out a tweet last night noting the divergence between energy and commodities, right? I think that it comes around every so often, somebody out there will note it. But as far as how an investor should look at this type of data and how it should, sort of influence their decision, I made a note that all this really tells us is that there's a divergence, and whichever your directional bias, noting and seeing a divergence, it's going to run counter to whichever direction you're hoping for, right? We want to see price confirmation. So if you're a bull on energy, you're not going to be looking at this saying, well, the CRB will play catch up and let's hope it resolves higher. And if you're a bear on energy, you're not looking at it saying it'll start to play catch up to, other, broad-based commodity indices. I think the fact that there's a presence of a divergence between these two says that the market's just uncertain as far as the path of least resistance here, uncertain on where we're seeing these two markets going, right?
Great chart. I like that.
Yeah. It's interesting. I mean, this has been noted. A lot of people have been talking about it, but it's something that I want to make sure we sort of apply to different asset classes and different assets, right? We want to make sure that we're seeing, confirmation between highly correlated price series, right? When they start to diverge, that's information. And we never want to find ourselves hoping that correlations will resume and that, things will resolve in the direction of your position, right? We want to make sure that if we're going to get involved, we're seeing that confirmation.
Dude, Shane, this is fantastic. I love this. When are you coming down to New York? Do you upstate New Yorkers come down to the city, or is it like you avoid it like the plague?
No, I mean, we find ourselves down there. We do have a pretty strong presence in Long Island. So we find our way down to the city a couple times a year. So next time I'm down there, I'll have to reach out to you guys.
Yeah. Reach out. We'll go. Stay away from Long Island. You don't need to go there. I'll meet you in the city.
Sounds like a plan, JC.
All right, you're the man, Shane. Come back soon, Spencer. Get him back soon.
Thanks, Shane.
Thanks, guys.
Adios.
Appreciate it.
Shane's the man.
Shane's great.
You know, I've never met Shane in person. Have you?
I don't know if I have either, dude. We've been good buddies for years now. I don't think I've ever met him in person.
That's crazy. We've never met Louis either. I'm looking forward to meeting Louis.
That's
Hanging out in California.
so excited. That's what I'm most excited for about our trip next month.
I'm going to introduce Louis to some Mexicans. We're going to get some tacos. I'm very much looking forward to it. Let's check in on the markets here. Dow futures up 10 basis points here, 20 minutes before the open. S&P's up 30 bips. NASDAQ up 40 bips. Bonds down again. What else is new? Gold up a little bit. Silver up 2% this morning. Copper up 1.34%. Crude oil up 1.5%. Natural gas up. And then the euro, yen, both up with the dollar slipping a little bit. Interest rates up as usual. And the volatility index slightly lower. So I gotta tell you, man, this bond market, there's something funky going on in this bond market. Can you throw up slide 1 here, Spencer?
I'm marking up some bond market charts right now.
I know how much Spencer loves talking about the bond market.
No, I don't hate it.
You don't hate it as much as you hate SPACs.
I have a lot to learn about the bond market. So
who doesn't, Spencer? Who doesn't?
Yeah.
Right. We all have a lot to learn about the bond. I feel like I learn something new about the bond market every day. It's a big market. I don't know if you heard. This is the U.S. 10-year yield, and man, I gotta tell you, man, I don't like being on the same side as the large speculators are, particularly when large speculators have on their most aggressive position in history. And that position is currently betting on higher yields and lower bond prices. Maybe they're going to be right. Maybe. But if they're right, they're going to be right without me, right? I'm not going to make that trade with them. In fact, I am looking to take the other side of the trade. I have not, but I am looking for that unwind. And when that unwind starts, woo, baby, look out. And another thing that I want to point out is that when was the last time you saw this much chatter on the old Twitter about the bond market? Everyone's a bond expert now. You notice?
Probably when the inflation thing began, late 20, early 21. Everybody was a bond expert then too. You're right.
I don't claim to be a bond expert, but I always joke how I can't have a serious conversation about the stock market without talking about the bond market. So like, at least I'm consistently talking about the bond market. Now all of a sudden everyone's a bond market expert. I'm just saying there's something funky going on here. The positioning is very, very aggressive right now. Momentum. If interest rates were going up at such a fast rate, Strazza, how come we haven't seen overbought conditions all year?
In interest rates?
Oh, I guess we did see it slightly in March, but nothing anytime recently.
In rates?
In rates.
Barely overbought in March, right?
Barely overbought in March, but okay, fine, we'll give it to them.
Well, how about this? We haven't been oversold in over 2 years. How about that?
Right. Well, interest rates have been going up, so you don't get oversold in uptrends.
I got the chart for you.
Which
hold on.
Right there. Okay. Okay. So we'll bring this chart up, and then we'll get Kimmy on, and then we'll get Sean on, and then we have to talk about this Walmart this morning too. But where is this chart, Steve?
It'll be slide 1 in a second.
Okay, there you go.
I'm telling you guys, there's something funky going on in the bond market. I'm telling you, I don't know what's going to happen. There's something funky going on. We're going to be sitting here having this conversation, and it'll be like,
that's like the worst thing you could do. Oh, there's something funky. I don't know what it is.
It's just the truth. You want me to lie to you and tell you I know exactly what's going to happen? I don't. I'm just telling you. It smells fishy. It smells like my cooler that I left the clams in too long.
Oh God, what's fishy about it? Just the fact that commercials are where they are, despite everything else we're seeing.
You got those lack of overbought conditions and the rates. Everybody's talking about bonds. I don't know, man. I'm just telling you, something funky's going on.
Chart 1.
Just saying.
I got you.
This is it, right? The price structures here are so clean. We've been looking at them the same way for several years now. For the 10-year, it is what, 4.2, 4.25, and for the 30 TYX, we're looking at 4.37, right? 4.4 maybe. Those are the levels. If these ranges resolve higher, that's it. Rates are going higher.
I have a funny feeling we got some magazine covers about the bond market about to drop.
Yeah.
Also,
well,
I think that's coming.
Think about this from just a pure supply and demand perspective. Just look at the price structure. Really nice multi-year base breakouts. Then a year of sideways, right? Consolidating those gains, digesting those gains, and these nice tight ranges. And now we resolve higher, and you get another leg up in rates. If that's not what people are positioned for, then that's a mistake, because that's what the charts are telling us.
It's not that people are not positioned for it; is that everybody, too many people are positioned for that, and the dumbest money on the planet is positioned that way in the most aggressive manner of all time.
I understand fading speculators, but I also very much understand why they're positioned the way that they are based on these charts, right?
Oh yeah, everybody agrees with you.
If these things go, look out, rates are going higher around the globe. In Germany, France, Spain, they're the long end of their curve already going higher, breaking out very similar ranges to these. We've seen these synchronized breakouts before in these government yields around the world. It looks like that's what's happening again right now.
I'm with you. I mean, I hear you. Everybody agrees with you. I'm telling you. I know. No arguments here. Everybody sees the same thing. Everybody agrees, and they're all positioned accordingly. So I guess we'll see what happens.
All right.
Shall we bring in Kimmy to enough with the bonds and let's get back to the stocks?
Enough with the bonds. That was fun and all, but let's get back to the stocks. Let's get back to the trades. Let's see what Kimmy's watching today. I bet you she's not watching the bond market.
Kimmy.
What's up?
Oh,
Hi, Strazz.
oh, futures are up this morning. What do you know? Huh?
Futures, it could be a little bounce to head lower, so we got to be careful.
Oh, taking advantage of the strength to sell is what I
well,
from your voice.
We'll see. I mean, listen, we've been straight down since like August 1st, August 2nd, right?
Yeah.
So could we have a dead cat bounce? Sure. Could we have a bounce that keeps heading higher? Sure. But also sometimes you get a bounce up and then pushes lower for the day. So just, I got to watch. I'm not loving a lot of stuff, some names, pulled back a lot. Not too much is enticing me. I'll see what's going on. Adobe was upgraded. We'll see if it hangs on to his 525 level.
Well, first of all, let's just quickly go over yesterday. Kimmy Sokoloff, 4 for 4 on the day. Long Tesla for a profit. Long Spies for a profit, shorted Celsius for a profit, shorted Home Depot for a profit, got a few positions open, both the long side and the short side. And then, so kudos to you. I feel like nobody's surprised that you were 4 for 4 yesterday. But what about Adobe? Taking a look at Adobe this morning, got an upgrade, you said?
Yeah, it was.
Yeah, I think it had a little upgrade. I mean, it's not up much. We'll see if it has any flare or any push to it. It's interesting. You see oil names rolling over a little bit. Oxy yesterday broke below its 200-day. It's above it now, but sometimes it dances around that level and tries to hold, or sometimes it just all of a sudden just flops.
Yep.
We have to see here. So we'll see. Not so sure.
I love Kimmy, shorting Celsius for a profit. Right.
What's wrong with that?
Because the thing was a ripper at new all-time highs yesterday, right? Or no, 2 days
Which
ago.
Also made money long C Limited the day before when it was getting slaughtered, right?
Yeah, I know. I know. I love the fade, is what I'm saying. I love the fade. I love it.
What did you say yesterday? You got to fade to get paid. What'd you say?
If you ain't fading, you ain't trading.
There you go.
But I've actually short Celsius over the past few days, over the past week or so.
Yeah.
But for the reasons that Spencer said, because it's been ripping and Kimmy's trying to fade that on the C Limited, buying that dip for a bounce. Like that's literally what she does. I mean, it's a mean reversion strategy for the most part, right?
Right. So we'll see. We'll see what goes on. I'm just very mixed. Some days, when you're in a trading room, it's very different. Sometimes you kind of like sometimes I wouldn't trade, but you feel like, you want to give ideas to people and there's opportunities. It's just, it's a dicey market here. It's either they're going to, we're in August, then we have September. They could bounce it some and then head back down. They could put this, they could bring the Qs down to 320 if they want.
September, historically the worst month. So it wouldn't be unusual at all to see a pretty severe correction over the coming weeks, month.
Right. So, I only have really 2 longs on and mostly all shorts on. So we'll see what goes on, over the next, maybe we get a ripper and we close a gap up above, or maybe that gap up above and the spies and Qs doesn't get filled till like December next year. So we'll see.
I like this Adobe trade. I'm going to be keeping a close eye on this one. I got my account open, ready to go. Let's go, Kimmy. Let's go. Just say when. I'm in.
We'll see if anything has momentum, right?
I like it.
All right, well,
where can the folks?
Yeah, Rachel in the chat. Rachel from FinTwit is on vacation, but she came in just to see Kimmy, and Joe goes, Kimmy brightens the show. Look, if you want Kimmy to brighten more than just this show, maybe brighten your portfolio for a little bit, hop on over to her room. The link is in the chat. It was on the screen. I don't know why it's not there. There it is. It should be on the screen now. Mm-hmm. There it is. Hop into her room. She's there every single day, live trading through the open and into the day, calling out her trades, talking, showing her screen. First of all, you see what she sees. You see her charts. You see her watch list. Get in there, check it out, trade with her, and you won't be sorry. All right. Have a good one, Kimmy.
Adios.
Bye-bye. Have a good one, guys.
You brought up a great point, how funny it is that she made money shorting Celsius yesterday because this thing's been such a ripper. But similar to the C Limited that was getting slaughtered a couple of days ago, and she made money from the long side in the worst performing stock of the day. And remember that when NVIDIA was ripping, she was shorting that one successfully too.
Yep. If there's one thing I've learned about day trading, it's that it pays to be contrarian. It's not necessarily true for investing or swing trading, but for day trading, it's definitely true. Okay,
I want to address Jerry Carey talking about how JC just called the bond market the dumbest money. People tell me it's the smart money all the time. No, I never said that the bond market's the dumbest money. The dumbest money is shorting the bond market. Right? It's not that the bond market is the dumbest money. Yeah. It's that the large speculators, which historically is the dumbest money, it has the most aggressive net short position in treasury bonds ever in history. So I don't necessarily know. Well, I do know. I know for a fact that I don't like being positioned in the same direction that the dumbest money on the planet is positioned at the most aggressive rate of all time. That just doesn't sit well with me. So I hope that makes sense. Does that make sense to you, Spencer?
Yes, it makes sense to me. Let's keep this train moving. Let's bring up my calendar here so we can talk about there's that and there's that. And where's my calendar? Here it is. Couple earnings. We are the end of earnings season here, but Walmart is the big one from the morning. And according to Walmart, everything is fine. The consumer is fine. The consumer is strong. It's all good. Yeah. Here's the chart.
Seriously?
From Walmart. Yeah.
I mean, maybe their consumers are fine. And that's probably, like Mr. Economist, Mr. Fundamentalist, but if their consumers are fine, it's not exactly like high-end luxury at Walmart, right?
No,
maybe things are pretty good.
This is the American consumer, right? The American consumer is not LVMH or Coach. This is the read that you want.
Yeah. So as my microphone falls off my desk, but anyway, EP
the stock's making all-time highs, so it's not like it's like Target talking about how their stock sucks because people are stealing items, right? Like this is Walmart. The stock's making all-time highs. Like if we're gonna listen to anybody, right? Like they're doing something, right?
Yeah, they're raising their guidance this morning too.
It's a solid beat too.
Oh yeah,
the revenue beat $2 billion. It's a big number for a company like this. Walmart CEO, we had another strong quarter. Food is a strength, but we're also encouraged by our results in general merchandise versus our expectations when we began the quarter. Sales strength led by grocery and health and wellness, while general merchandise sales declined modestly. And the CFO had some comments too About the consumer.
Strazza loves the CFOs. Have you noticed?
Hold
He's
on.
like, oh, the CFO said something. Let's see what he has to say.
Consumers are not compromising. They're showing a willingness to spend, was the commentary from the CFO on the call.
What, isn't credit card debt at an all-time high?
I was waiting for someone to say
Okay.
it.
Guys,
More debt. More debt.
stop. That you do realize that's a chart crime, right? When they show
Dude,
you,
I'm just messing around. I don't give a shit.
Here's the thing about the credit card debt charts. When the economy grows, of course, credit card debt grows, right? You need a denominator in there. You can't just show credit card debt. Credit card debt is percentage of GDP.
Also, isn't it always just going to go up by the nature of time?
It should go up.
It should just go up always, right?
I don't want credit card debt to like stagnate and roll over.
Yeah.
Like, have you seen the zero TDE options? How the volume is record highs? It's like, well, yeah. Shouldn't we continue to expect that? Like, shouldn't it just go up to the right forever? Like, isn't that normal?
Yeah.
Like,
Yeah.
you expect volumes to decline? You know, like.
No. Okay. Let's keep moving here. From retailer to value tech, Cisco, EPS beat, sales beat, guidance beat. Well, we'll call it in line. The range they gave was in line. Anyway, nice report for Cisco. Have not seen what the stock is doing this morning. I'm assuming it's up a little bit.
What am I going to say about this stock in our new newsletter, JC? I mean, what can I possibly say about these legacy tech stocks in the Dow?
You're going to say how you're replacing it with something better.
Man.
This is, just like Walmart, they're making new all-time highs. They're killing it. So maybe they're doing something right. Maybe we should listen. This is the opposite. This is a company that doesn't do anything right. And why on earth should we listen to them? This is like Credit Suisse downgrading another bank. It's like, bro, who are you to downgrade anybody? Worry about your own shit, right? You know what I'm saying?
You have a stock here, that looks like it's completed a nice base. You got the 200-day curling higher, pointing higher. This stock is up 25% off its lows from last year. Okay. If you look at something like Nvidia or some of these leaders, we're talking about hundreds of percents, 220%, right?
Exactly.
Like, it's just, there's not much here in a bull market or a bear market for these old tech stocks in the Dow. They don't bring anything to the table.
Also, great point on
Cuts.
I forget where. I think maybe in Animal Spirits. I don't know. The other day, and it was like, what is the reason? Like one of the main reasons for owning a Cisco is you get some yield, right? But why would you want to own Cisco for the yield when you can get better yield in the bond market? It just doesn't make any sense. So,
Hey, yo, look at Spencer talking about the bond market.
hey, yo. Okay, and then last one
Spencer
here.
loves the bond market now.
Last one here. Bilibili. I still don't really know what they do besides Chinese entertainment. That's all I really know. Maybe
I think it's online retail, isn't it?
I thought it was like a video.
Wasn't there like a beer commercial back in the day where they would all go Billy, right?
Yeah, it wasn't even that long ago.
I thought this was like a YouTube equivalent, but I'm not really sure. Anyway, EPS beat, sales beat, and they did lowered their revenue outlook for the full year. But this was, pre-market's over now. But last I checked, this was the top. A couple hours ago, was at the top of my gainers list. It's not anymore, but still up.
So this is electronic gaming and multimedia, $7 billion market cap, based out of Shanghai, China. So who the hell knows what they do? Maybe they make shoes. Who the hell knows?
I don't know.
Whatever it is they say they do, my bet is they probably don't.
And it wasn't an Animal Spirits shout out, Rachel. I feel like I'm guessing that you're talking about what I just said about the credit card debt.
Or
No.
maybe I shouted it out.
Oh,
Yeah.
no, but that's a very well known chart crime. It's been going on forever. Everybody knows about it. It's not a hot take.
Yep. Okay. That was all that I had for earnings. Shall we take a quick gander at the hot corner?
Yeah, we should. Got some action today, boy.
Man,
Big lists lately.
all through July, the table was shrinking, and all through August, it's just been expanding every single day. Funny how that works out.
Seriously.
Earnings blackouts.
Yep.
So hot right now.
Dude, how about this PI again?
Yep, hitting it again. Same guys, 3.8 million. The chart looks good. Throw up
Throw up
the
slide one. Throw up slide one there.
Yeah.
Slide 1.
Slide 1.
All right, fine. Do you want to get
As in
that?
the one before 2. As in the one after 0.
Throw up the impinge chart.
All right, I'll have Fonz pull it up.
PI.
Right. So right back here at these prior cycle highs from 2017, the stock's been hit big, from 140 back down to about 50 some bucks. But at least you could define your risk here. This was a high flyer. This is, secular leader not long ago. So maybe
60 bucks. That's your level. 60. If you're above 60, you can buy as much as you want.
Yep. Listen.
So who are these guys? Hold on. Who are these guys?
Semiconductor, right? Would I rather be in
no. Celebra Capital.
Oh, I don't know.
$4 million bucks? Not nothing.
It's also not anything for an institution. Back to the table.
True.
Back to the table.
And what about the homie Fred Hassan? Fred Hassan dropping a cool milli on Precision Incorporated biotechnology stocks PGen. This is a tiny stock. No, this is a penny stock. Leave it alone. Sorry.
How
100 million market cap.
Yeah. How about all the REITs that continue to pop up on the list lately? So
and regional banks, another regional bank, Thomas Seeger. Piker purchase only 150 grand, but
so we've been seeing the banks all year. That's nothing new. But these REITs are popping up more and more lately. HR stands out today, and ADC. ADC, we had 2 buyers in it. Chart doesn't look great, right? But it's one of those situations where what if it's not a top? Something like ADC.
Right. What if it's not a top?
And then
what about this exponential fitness? What's up with that? This guy, by the way, look at the Expensify again. That Stephen McLaughlin guy.
Yeah.
The guy just keeps buying every day. Just an FYI. But the CEO, $500,000, exponential fitness, investing $500,000.
broken chart.
Guy,
Messy chart.
Yeah, what's his name? Anthony Geisler.
So
$500,000.
No.
He only makes $600,000 a year. So he basically put his entire annual salary in the stock.
Listen,
That means anything to you?
If there's one stock you want to focus on from today's list, it's way at the bottom here. It's the smallest one. $100,000 purchase. Lennar, one of the directors. Just look at the structure here. Right. Look at this chart. And I would even zoom in and draw it up like home builders. If you go to chart 1, there might be chart 2 on the deck, ITB chart. This is a zoomed in look, and this is what Lennar would look like if you zoomed in as well. Throw up ITB, please.
Yeah. 1 second. Fonz, why don't you bring it up?
This is the home builder. And by the way, Uncle Warren, I mean, it's only $1 billion, but Uncle Warren was just buying these things in his latest filing too.
Yep. So Uncle Warren, I don't know if he was buying Lennar. He might have been. Yeah.
He was buying DHI. He bought a bunch of them, but it was mostly DHI. But whatever, same trade.
They all look the same, right? And
they all look the same.
This is the point. ITB took out those former highs that we're talking about with tech. We're talking about with industrials. We're talking about all these indexes and stocks like Apple failing at these former highs. Home construction took them out, and now they're just coiling in such a nice high and tight pennant little short-term continuation pattern type of formation here. You could buy these flag breakouts or these pennant breakouts all day and just define your risk using either a measured move of the base or the 161.8% extension of the base. So something like Lennar, I would do the same exact thing. I would zoom in on the chart. I would draw the little pennant, buy an upside resolution of that pennant, and then, fib it to the 161.8% extension for a target.
Ooh, I like how you use that as a verb. Fib it.
Yeah, these stocks are among some of the most resilient in the market right now. If and when, stocks find their footing and resume higher, these are going to continue to be leaders. And you have some really nice levels to trade against. So I like the home builders right now. Like them a lot.
That's a very nice trade setup there, Strazza.
It's great.
Yeah.
Right?
That was very, very well.
Yeah.
Very detailed, very nice. Well done.
But also very, very succinct. Yes,
Yeah.
that was nice. Okay.
Yeah.
All right. That's it for today's Hot Corner. Let's quickly do the chart report, and then we'll get Sean on here and talk
Where do they
some
get
options.
them, Spencer?
Where do you get the hot? If you don't have the Hot Corner by now, I don't know what to tell you. We talk about it every single day on the show. It compiles all the biggest trades from Washington to Wall Street to the boardrooms, and it's free. I don't know. Email us at the link. Email in the description. Questions at stockmarketmedia. Now let's do chart report real fast because there was one I wanted to tweet yesterday that I thought was interesting. That we sort of teased earlier.
Go for it.
What is the chart of the day, Spencer? More people talking about the bond market.
Yeah, I have to scroll all the way up because I was at the way bottom for the one that caught my eye. But yeah, chart of the day.
Saunders, no relation to Deion Sanders.
No. Yeah.
Highest 10-year treasury yield, highest since 2008. Yeah. Sounds to me like everybody got the memo. Just saying. Am I wrong? Are we going to split hairs?
No. What caught my eye was these tweets way at the bottom. This one caught my eye. We talked about it a little bit with Shane, right?
Hey guys, did you know that U.S. yields are at their highest level since 2008?
Now I do.
My grandmother just called me saying, "Hey, those yields, huh?" If I start getting text messages from my high school friends, I swear to God, I'm flipping the entire book long treasuries.
Okay.
I'm telling you.
Anyway, I like this. I don't necessarily agree with it, but I like the perspective of this tweet. This is from Renaissance Macro Research, right?
One of my favorite technicians, by the way.
Yeah. So, talking about China, talking about FXI, it's very hard to think of a positive narrative, but that's okay, right? Sometimes when no one's looking for a positive narrative, that's when one takes form.
Bonds.
No, I think what he's saying is, and we see this a lot, when the news is terrible in China, that's the time to look to China.
Yeah.
When the market tends to be trending. When they start coming out with all this good news, markets are usually not doing great over there.
Yep. I appreciate contradicting perspective, or a perspective I don't necessarily agree with, because it makes me think, and it makes me question my own beliefs. So I like this very much.
Can you throw the Todd Sohn chart up just above that? Actually,
yes.
So
talking about high volume, low returns, China ETFs live in the nightmare zone.
we need bigger font from Sohn.
High volatility, not high volume. High volatility, low returns.
Yeah, it's not great. That's a good chart. Oh my goodness.
That is a great chart in the nightmare zone. I like that. Todd Sohn, friend of the show, fan favorite.
You get all the risk, none of the reward. That's great.
Right. Exactly. Right.
They own them. It's like Disney.
Yeah. Not only do these stocks suck, but they make up for it by being extra volatile as well.
Yeah.
All right. What else?
No, I mean those are the two that caught my eye. If you guys want the chart report, click the link or use the link on the.
Hold on, I like the bespoke chart. Historically, August has usually been the lousiest in the years when the S&P 500 was up 10% year to date. How about that? A little bit random cherry picking some
They're
good data mining there, but
they're really good at that.
They're really good at that.
Yeah. All right, get the chart report. The link is scrolling there at the bottom. If you can't see it, it's also in the description on YouTube. Okay, let's.
So there was an old I Love Lucy episode where Lucy and Ricky took English classes, like proper English classes, and then the first thing that the professor said was, "All right, there's two words that you got to stop using." I'm paraphrasing because this is in the 1950s. There's two words that you need to stop using. The first one is lousy. And the next one, and the next one is swell. And then Lucy and Ricky start battling of like, no, let's hear the lousy one first. No. Can you tell us the swell one first? No. And then they start battling back and forth. I don't know. For you I Love Lucy fans, that one stuck to my head there.
And thank you for the talking the bow on the bow on this one. Fishing frugal lures, JC. It was dilly for the Bud Light commercial, not Billy.
Dilly. Bud Light. Remember when that was a successful company?
Dilly dilly.
Those idiots.
All righty. We got options, Sean, here. Let's recap. You guys, what did you guys say? You sold a strangle?
Yeah, where can everybody get the chart report, by the way? Close that out.
I put it on the
Did
screen.
you put thing? All right, just letting
I did.
everybody, because if you're not reading the chart report, your life has gone
on the
horribly
screen.
wrong.
All right. Yesterday, these guys sold a strangle in Freeport. Maybe they'll talk about it a little bit. Let's find out.
Shawnee, baby.
Sean.
Oh, I had myself muted. Sorry, guys.
Oh,
I love it. I love it when JC plays the old guy with the I Love Lucy callbacks.
you like that? You like that? Usually it's you being the old guy.
I know. That's why I'm very happy, and I'm glad I got the memo about the orange themed T-shirts today. We're all on brand today. Well done.
And tomorrow is Crypto Friday. You know, we should have saved it for tomorrow.
You know, whenever I send you pictures of my bull market shirts, your response is usually needs more orange. Plenty of orange going on here. This is very citrusy.
First of all, Sean texted me like 16 times last night as I'm trying to go to sleep. Like, I haven't even looked. It's like I'm getting like essays on text message. Like, what?
Sorry,
what
dude.
This? What are you, my wife now? Like, what do you call me?
I forget that you're 2 time zones ahead of me and you have 3 kids at home. I apologize.
I'm trying to go to sleep, Sean. I think you're texting me about like the football game we're going to in California. It's like the last thing on my mind.
Look, JC, Strazza and I just spent 3 weeks in Asia becoming logistics experts, and so while I was with my new skill set, I was trying to text you some logistics for our trip to LA. That's what I was doing.
And what's the bottom line? We're not taking the train. We're going to Uber instead, right?
I was suggesting we rent a car.
Oh, okay. I didn't get to that part because it was such a long text message chain that I didn't get all the way to the bottom, you see. I wanted to take the train because the train would be cool, Strazza. I don't know if you've ever done the LA to San Diego train.
Patrick is driving us.
Okay, fine. But what about afterwards from the game down to Huntington? There's
Patrick.
5 of us in a Tesla. That's not going to fly.
So 2 in an Uber.
Right. That's what I said. Yeah, exactly. All right. We still need a pregame spot. If you guys live in LA or know anything about LA, I try to avoid Los Angeles like the plague, particularly when I lived in California. It is just, I'm just, you know, I don't really need to go to LA ever. Maybe a little Santa Monica every now and then, maybe, you know, but I'm good.
You see this in the chat, Sean? When in Thailand, just hire a car. Oh, we know how to get around in Thailand.
Oh, no, we're tuk-tuk experts. We are tuk-tuk
We know
experts.
how to get around in Bangkok.
You guys have a death sentence. Okay, so if you guys know where the best tailgating opportunities are in Los Angeles, we will be there for the Dolphins-Chargers game. Contrary to popular belief, the Chargers are no longer in San Diego. They now reside in Los Angeles, the city of angels.
And no one noticed.
And nobody noticed. Nobody cares. Okay, so we came into the meeting yesterday. We have our analyst meeting on Wednesday, and I came in all fired up saying, you know, volatility is not so high, but it's inching higher. I'm thinking maybe we could collect a little cha-cha, and then Shawnee baby over here was thinking the same thing. How about that, huh?
Yeah, look, this is not the ideal volatility environment for us to be selling premium. We'd like volatility to be higher, but really the main goal for me to be selling volatility here is, at least for me personally, my portfolio needs a little bit of portfolio diversification. I'm still pretty long, not too happy about it at the moment, as you can imagine, as the market's been sliding over the last couple of weeks. So really, it's a good portfolio diversifier for me to kind of wait out what we think is setting up for a little sideways slop for the next few weeks, maybe even a month or so.
And this isn't a situation that's unique to you. Sometimes it is. In this case, I think that this is probably a good trade for a lot of people's portfolios, myself included. This is not a directional bet. In fact, it's actually the opposite. It's a bet on a lack of direction. Why don't you throw up the Freeport McMoran chart? You know, what we were looking for was a messy chart. This one is literally in the middle of a massive range, which serves 2 purposes. Number one, the massive range is the environment that we want to be selling the wings. And also the fact that it's right in the middle of this massive range means we can let it dance. And the more she dances, the faster we make money. I like that.
Right. So in that chart, you see the horizontal lines at 45 and 35. Those are the option strikes that we sold in October. We collected $1.80 to sell the naked calls and the naked puts. And as long as we stay within that range, we should be fine. Although my risk management levels are a little bit tighter than those guardrails that we see on the chart. I'm sticking to the 45 on the upside, but 36 on the low end is actually going to be my signal to cut bait and run. It doesn't show up as well on this chart, but 36 was a pretty key level. Where there were a lot of closing prices around that level. So I don't want to see it lose 36 is what I don't want to see. But look, we got time. I'm not gonna just put this trade on and forget about it. I do have a limit order out there to close it down for 90 cents, which is half of what I collected. I don't like to let these things go all the way to expiration. Bad things happen sometimes when you let these things, when you try to get greedy and squeeze out the last nickel and dime.
And let's talk about that for a second. Let's say you sell the strangle, you sell the 45 calls in October, you sell the 35 puts in October, and you collect 100 grand, right? Just to keep the numbers simple. When you can buy back those options for 50 grand, you do that, and now you keep $50,000 in profits, right? If you collect $10,000 by selling the 45s and 45 calls, 35 puts, you collect 10 grand. When you can buy it back for 5 grand, you go ahead and do that, right? And you collect the profit and you keep the 5 grand.
He's talking in Vietnam dong numbers over here.
Dude, seriously, every day that I talk to Strazza since you guys got back from this trip is something about Vietnam. Whether it's a new ETF, there was an IPO the other day or something like that. Like every day, like you guys. And who was I talking to the other day? Was I talking to somebody else? And they were like, yeah, Vietnam was my favorite. I'm like, dude, you guys love Vietnam.
New highs for dollar dong, Sean.
Excellent.
So new lows for the dong. Bring out the dong joke.
World-class golf trip, instead of costing $40 for the rounds, now going to cost $35. Excellent.
That's right. And Vietnamese tech stocks are also making new all-time highs.
I didn't know Vietnam had tech stocks.
They do.
Mm-hmm.
But they don't even trade ADRs in the United States, right?
I mean, we just got a new one yesterday. One just IPO'd.
The first. So now we have one. That's the number. We have one now.
I mean, that's not really one that you want to use.
It's based in Singapore. It's not even based in Vietnam.
No, I said, it's not a bullish bet on the Vietnamese.
That's like how companies are headquartered in Delaware.
We get it.
Right.
Oh, it's funny. So our attorneys called me yesterday and they're like, hey, JC, because I gave them the San Diego address. And they're like, hey, JC, are you guys in the ugly sweater business? And I'm like, what are you talking about, the ugly sweater business? So as it turns out, I don't know if you guys know this, the Tipsy Elves that make the ugly sweaters used to be in our San Diego studio before we took that over 3 years ago or whatever. So when our attorneys were like doing like whatever they need to do, they're like, you're in the ugly sweater business too? Like,
we should totally get into the ugly sweater business. We can crush it.
We still get mail from the ugly sweater people. We still get it. Giancarlo has to do the return to sender still, and we've been there for years. Isn't that funny? Fun fact. Can't make this shit up.
Let's tie up this option discussion here real quick. Let's finish our thoughts on why we're selling premium. This market, as I alluded to a little while ago, the market feels kind of undecided here. We've had a pullback, a meaningful pullback. I'm not going to say correction. I don't want to trigger JC into a whole discussion about how people are stupid.
It's a correction, and if you don't think it's a correction, you're an idiot.
Right. Okay.
Not you specifically, but
I didn't mean to trigger you. Shut up. But look, the environment we're in right now, although volatility isn't as high as we want it to be, we expect it to reward some delta neutral options trading here over the next few weeks as the market kind of sorts out what it needs to do. I mean, we might be going even lower from here. We don't know. But either way, it's not going to be one way. It's not going to go one way down. It's not going to go one way up from here. We're not going to bounce straight up from here. I do expect a lot of sideways slop, fooling bulls and bears alike for the next few weeks at least. So where my head is at is I'm looking for delta neutral trades to put on until the market tells me otherwise. That's where my head's at, JC.
And can you explain to the folks what a delta neutral is, Sean? What does that mean
Sure.
exactly?
Delta neutral options trade is an options trade typically where one is selling premium, but not always. But generally what we're looking at is we're not picking a market direction. We're picking a strategy that if we're selling premium, which is what we're doing here, We are betting that the underlying instrument that we are selling premium on, selling a delta neutral spread on, we're betting that that instrument's going to more or less go sideways. It's not going to go too far up. It's not going to go too far down. It's going to kind of stay within the guardrails of support and resistance. That's what we're betting on. That's what we're hoping for. If we have a big directional move, that does not play well for a delta neutral strategy. So it's basically when you have no good feel of where the market's going or you think it's going sideways, short premium, delta neutral is generally a really good play to make.
All right. And Sean and JC talked through this idea in a lot more detail yesterday on the options trade of the week. I just dropped that link in the chat, in both chats actually. On that show airs every Wednesday on our channel, so check that out.
Stock Market Mike, he wants that as a t-shirt. That should be our first ugly sweater right there. I didn't mean to trigger you, JC. Shut up.
Yep.
I got an interesting recess that you guys will get a good chuckle out of.
Already? I was going to do one more stock that I like.
Right, just do one more stock.
Yeah, lay it on us, Strazza. Let's go.
All right. Pull up this Snyder chart. It's chart 90 in the deck.
What?
Going deep in the deck.
So look, if we get that rotation we're talking about, this is a mid cap. It's a trucking stock. Right? It's transport. It's an industrial. Monster base here. A little bit of weakness the past few days. Pulling right back to those former highs. Our risk level right around $30. Listen, if we're above there, like this one a lot. It popped up on our Young Aristocrats scan. It's hiked its dividend consistently for 6 straight years now. We love stocks that do that. Pays you a nice little, 1.2% yield just about. And again, above 30, path of least resistance is higher. We got a really clean level there. Like this one a lot.
Trucking
right
stocks
here.
are
It's
ripping.
literally
I
right
thought we
here.
were in a recession.
That's why I wanted to bring it up. It's right at our level. Got a nice little pullback.
I also wanted to. We still have never brought up this ATE chart, so here it is. We talked about this off air several days ago, and
These are the ones who are burning down Hawaii.
well, they're being accused of it. That's for sure.
Yeah.
So this is.
Are they really being accused of burning it down? Why? Not on purpose.
This company's done.
Yeah. So
It's a situation.
if you remember back in 2018 with the California wildfires and PG&E was the utility out there. PCG was the ticker on that one. They got blamed for those fires. It appears that this is Hawaii's largest utility company. They're being blamed for the Maui fires here. So,
Is there any basis to that blame, or is it just hey, we got to blame somebody?
Well, I mean, without being crass, where there's smoke, there's fire with these type of things, right? So, yeah, generally speaking, the vultures are circling. Put it that way. There are multiple lawsuits and reports now saying that this company knew that they had old equipment and that fires were a risk, and they didn't do anything about it. So anyway, to Strazza's point, it's probably game over here. I mean, PCG never came back. That stock went from 70 to 3.
Because they get fined out of business.
Yep. So anyway, here's that chart. If you want to look at charts that make you cringe.
Right,
okay.
Well, if Hawaiian Electric goes out of business, then who's going to supply electricity on the island?
Well, they're not going to go out of business, but
Government will subsidize them to the point where they make no money but still provide the service.
Yep.
Got it.
All right. To recess.
Yeah, I love these shirt ideas. Keep them coming.
And Ravi, they don't have a competitor. Or maybe there's a smaller one in Hawaii, but they provide like 80% of the power in Hawaii. So, I don't know. All right.
All right, so you guys know how I went to a mall the other day?
You said that. Yes.
I went to a mall the other day, and it was a lovely experience. The King of Prussia Mall. I hadn't been to a mall in, 20-something years, maybe. I hadn't been to a mall in a long, long time.
Were you thirsty for an Orange Julius? What were you doing there?
I had to go. I bought my wife a bracelet, and it was one size too small. Fun fact: 80% of women are a medium in bracelets. I just learned that. So anyway, I was in the King of Prussia area buying a Thule, which is those big storage bins for on top of the Yukon for when you have a wife that likes to overpack. which I certainly do. Many of you might also. So my buddy, who's an accountant, he's not like one of these Mr. Fix-It, Home Depot going to people. He's like an accounting auditor, math nerd. And he tells me that get the double XL. It's easy to install. It'll take you 10 minutes. So I'm like, okay, this guy, if he could do it, I could do it. I feel like I'm more Mr. Fix-It than him. Yeah. So let's go. So as it turns out, it comes in 1,000 pieces. You got to cut like this rubber thing with a scissor. I'm like, are you shitting me? JC, no way. I'm not doing it. So I'm dropping it off. I'm dropping it off today at LL Bean, and it's going to be installed for me. I was lied to. I was told this would be easy. Dude, this thing has it's like 3 different types of instructions or different languages. No.
Is it made by IKEA? That's what it sounds like.
Oh man, it's a Thule.
We could.
So you have to install. You have to install the rack, and it's like car specific for my car. So it's different instructions, and for say Strazza's car would have a different instruction manual.
Just wait, because I'm actually interested in this. You literally bring your car to LL Bean, and they install it on your car for you.
Well, if I had all the pieces, the place that I bought it from, Rack Attack, actually, shout out Rack Attack. Very cool store, by the way. There's so much shit you can buy. Rack Attack by the King of Prussia Mall. If there was one piece that I had to order on Amazon, I was like, oh, I'll put it together. Rob says that it'll be easy. Bullshit. Get someone to install it for you. I'm doing it today.
Your first mistake was ever believing Rob that you could build anything.
He's trustworthy. He's a college graduate. He's a CPA.
Oh, he has his master's.
College graduate.
He's a partner at Ernst & Young. I mean, I don't know. He seemed trustworthy.
We could do like handyman fails as a segment here. So I might as well give you mine now, make you feel better. Because you warned me a few days ago. You were like, be careful when you order the washer dryer. What did you say? You ordered a gas instead of an electric.
I think I ordered an electric and I needed a gas. Who knew that there was a difference, right? Yeah.
So I got the electric. I had that much figured out. I have this special little dryer outlet for it. My old washer dryer unit was so old. It was one plug-in, one outlet. So they bring the new one. It's got 2 plug-ins. And the Home Depot guys are like, what are you doing, man? You're supposed to check the wall that it had enough outlets. I'm like, there was just one here. I didn't think the outlets would be different. I need an electrician to come out today, put in the outlet. So I have my washer dryer just sitting in my living room right now. Just right in the middle.
Nice.
Couple of disasters over here. I mean, just geez.
I have a home question. Does anyone know how to get the smell out of a trash can? Like, not the
in your smells. What is wrong with both?
Not the trash. It's the cans. It looks like something died in there.
Oh, ask JC. He's an expert.
Yeah, I do it all the time. Yeah, I clean. You got to clean out the bins.
Yeah, clean it with what is what I'm asking.
Vinegar.
Dish soap.
Vinegar.
No, dish soap didn't work.
Vinegar.
Vinegar. Damn.
Vinegar, lemon, right? You do,
and then leave it outside in the sun for a whole day.
All right, vinegar.
They're always gonna smell. You're talking about your outside.
No, I'm talking about like my kitchen. It's a really old garbage can, like in the kitchen.
I knew one.
Yeah, you got to make sure that your cleaning lady cleans the bins. We used to have this
cleaning lady. Who do you
Spencer,
think I am?
The rubbish bins. The rubbish.
Spencer, if you're anything like me, this is how I solve that problem. I take the garbage can.
Yeah.
I pick it up. I take it outside. Put it where my trash gets picked up, and then I go on Amazon and order a new garbage can. That's how I do it.
That's probably the solution.
I know, but I have an expensive. I have an expensive garbage can. Like these things are like $300. It's like one of those big, massive ones. I have an expensive garbage bin, so I can't just throw it away.
You're literally throwing your money away on an expensive garbage can. Well done, Jason.
I actually really like it. I'm not gonna lie. I have the humongous, obnoxious one. I really like it.
You know what I don't like about these garbage cans? The like how they're like automatic. I want to push and have it pop open because
that's what I have. That's what I have.
I step on the bottom and it opens up. It's great. Right. I'm telling you, I'll send it to you.
I don't like these electric ones because they break and then the button doesn't work anymore and you're like, what the hell happened? I'm so bearish. All that. The same with the trunks, like your car. I can close my own trunk. I can close my own microwave. I don't
you need a button. Come on.
Stop.
By the way,
I'm with him on the
Mark Trimmer is so right. In Apocalypse, the 4 of us are doomed. We've got nothing. No survival.
I'm okay with that. Do I really want to survive the
don't wanna-
apocalypse? I mean, I'm pretty sure I don't want to be around anyway. You know?
Apocalypses
All
are
right. All right. Here's the schedule for today, everyone. Sean's hopping on for an options jam session at noon Eastern. CRL chart request live at 1 o'clock. Stay tuned for that. That's Strazza and Pat today. That'll be a wrap for us. Thanks to Shane Murphy. Thanks to Kimmy Sokoloff. Thanks to Sean. Thanks to JC, Strazza, everyone in the chat. Hey, hit the like button, subscribe to our channel. We'd appreciate that. Have a good rest of your day. Go make some money. And catch you guys on the flip side.
Adios.
later.
Run it. I can't take no loss. I don't even know what it costs.